Welcome to The Explainer. Today, we're taking something people might mistakenly think is a totally dry topic, and we're flipping it on its head. We're going to completely decode the complex, sometimes intimidating world of business finance. By the time we're done here, you're going to see exactly how the numbers on a page tell the real, living, breathing story of an organization. Let's get right into it.
Okay, let's dive in with this core quote from our source material. Accounting is universally known as the language of business because it offers a standardized framework for recording, reporting, and interpreting financial data. Now, I really want you to hold on to that metaphor. Accounting is absolutely not just dry math or, punching numbers into a calculator. It is the fundamental way a business communicates its health, its struggles, and its big wins to the rest of the world. If you can't speak this language, well, you just can't truly understand the business.
So, here's our roadmap for this explainer. We're looking at 1, the language of business, 2, two main branches, 3, 5 core components, and 4, why accounting matters. We're going to build your fluency step by step. Section 1, the language of business, decoding the definition. Let's look at what this financial language is actually built to do. At its absolute core, accounting is defined as the process of recording, summarizing, analyzing, and reporting a business's financial transactions. Think of it as this massive, comprehensive tracking system. It tracks the money coming in, the expenses going out, the stuff the company owns, its assets, and what it goes to others. It basically takes the absolute chaos of daily commerce and organizes it into a clear, readable reality. And it all happens in 4 steps: record, summarize, analyze, and report. It's a cyclical journey. You start with the raw data, right? A sale is made, maybe an item is bought. You record it. Then you summarize all those hundreds of individual actions. You analyze what that summary actually means for the business. And finally, you report it out as a polished, actionable insight. So why go through all this meticulous tracking? Well, there are 2 primary purposes. First up, measuring financial performance. This is how businesses figure out profitability, pinpoint risks, and make those big strategic decisions. Basically asking, hey, are we actually making money here? The second purpose is ensuring regulatory compliance. This keeps the company perfectly aligned with financial laws and reporting standards. Put simply, are we making sure we aren't breaking the law? You need both. They're absolutely vital. Section 2. 2 main branches of accounting. The 2 dialects. Now, what's really fascinating here is the absolute contrast between these 2. Just like any major spoken language, accounting actually shifts depending on who you're talking to. On one side, you've got financial accounting. This is for the outside world, using official statements and incredibly strict rules. On the other side, you've got managerial accounting. This one's internal, focused on detailed reports, and it's highly tailored. The audience literally dictates the rules. Let's look a little closer at financial accounting. This dialect is entirely geared toward external stakeholders. We're talking investors, banks, regulators, folks on the outside. Because they rely on these numbers to make major financial decisions, transparency is everything. That means strict adherence to standardized rules like GAAP, that's Generally Accepted Accounting Principles, or IFRS, the International Financial Reporting Standards. You can't just make up your own reporting style here. Everyone has to be reading from the exact same rulebook. Contrast that with managerial accounting. This is designed strictly for internal decision-making. Management uses this for detailed financial reports, setting budgets, and evaluating performance. And because this stays inside the house, it doesn't have to follow those rigid, standardized external rules. It empowers management to be flexible, to tailor the reports to exactly what the company needs, and to dive deep into the nitty-gritty details required to actually run the day-to-day operations. Moving into Section 3 of 5 core accounting components. If financial and managerial accounting are the dialects, these are the vocabulary and grammar. 5. There are exactly 5 foundational components that act as the engine for all of this financial practice. Basically, everything a professional accountant does is going to fall right into one of these 5 buckets. Component 1, recording financial transactions. This relies on bookkeeping, which is just the systematic logging of every single sale, expense, and asset acquisition. It uses something called double entry accounting. All that means is every single transaction requires both a debit and a credit to keep the whole equation perfectly balanced. Like if you buy a new computer for the office, your equipment assets go up, but your cash goes down. For every action, there's an equal and opposite financial reaction. Let's move to component 2 and see how this builds, preparing financial statements. So once you've logged all those thousands of individual transactions using bookkeeping, you have to summarize that massive pile of raw data into key readable statements. And there are 3 core statements you really need to know here because each tells a very specific story about the business. First, the balance sheet. This is a snapshot of your financial position at one single moment in time, your assets, liabilities, and equity. Next is the income statement, often called a P&L or profit and loss. That tracks your revenues and expenses over a time frame, like a month or a year. And finally, the cash flow statement. This monitors the actual movement of cash in and out of the business. You could be profitable on paper, but if your cash flow statement says you have zero liquidity, you literally can't keep the lights on. Component 3 is cost accounting and budgeting. This is where we analyze direct costs, say the wood and labor it takes to build a chair, along with indirect costs like the electricity for the factory itself. By figuring out the true, fully loaded cost of producing goods, management can set smart pricing strategies and actually maximize their profits. Component 4, auditing. This is all about ensuring the records we've been talking about are actually accurate and legally compliant. You have internal auditing, which happens inside the company to spot inefficiencies. And let's be honest, there is a certain energetic thrill in catching internal fraud before it turns into a massive disaster, right? Then you have external auditing. This is performed by completely independent outside firms. And if you're a public company, this external verification isn't just a good idea, it is legally required. And the final piece of the puzzle, component 5, tax accounting. This focuses entirely on navigating the absolute headache of complex tax codes. Tax accountants calculate corporate, sales, and payroll taxes. They ensure accurate filings to avoid nasty penalties, while maximizing legal deductions, like equipment depreciation. Essentially, their job is to keep the government happy while keeping as much money inside the business as legally possible. Section 4. Why accounting matters. Cultural fluency. Let's answer the big question here. Who actually cares about all this? Turns out, practically everyone in the economic ecosystem cares. This data is the absolute lifeblood of decision-making. Business owners use it to track revenue, manage expenses, and know exactly when it's time to pivot strategically. Investors and lenders rely on those external reports to decide if a business is stable enough for a stock purchase or to approve a loan. Government and tax authorities use proper bookkeeping to enforce tax compliance and prevent fraud. And finally, employees and management use those internal managerial reports to optimize the performance and strictly control operational costs. Everyone's got skin in the game. So, to summarize our core takeaway today, accounting is the absolute foundation of financial management. From the daily logging of tiny little transactions all the way up to rigorous high-stakes audits and tax compliance, it is the fundamental tool driving every critical decision for owners, investors, regulators, and employees. Without it, a business is flying completely blind. Which brings us to our final thought for this explainer. We've decoded the vocabulary, the dialects, and the grammar of the business world. But I want to turn this back over to you. How fluent are you in the language of your own finances? Whether it's your personal budget, a side hustle, or your actual career, applying this standardized framework completely changes how you see the world. Thanks for hanging out and learning with me today, and keep exploring.